This is Horizons Middle East and Africa. Our top stories this morning. Victory rally. The Nikkei 225 jumps and the yen edges higher after Prime Minister Sanae Takaichi's ruling LDP achieves the biggest post-war victory for a single party in a Japanese general election. Oil declines as tensions in the Middle East ease. Iran is describing its nuclear talks with Washington as a step forward, with another meeting set for this week. And we hear from Saudi Arabia's Finance Minister Mohammed Al-Jadaan as the kingdom plans to release an updated strategy for its $2 trillion economic diversification agenda. It's just gone past 9 a.m. across the Emirates, 7 a.m. here in Cape Town. I'm Jennifer Zabasaja in for Jumana Bersechi. Happy Monday to you. And if we just take a look at where your markets are trading right now, they are continuing with a bit of positive momentum that we did see at the close of last week. If you can remember, last week was quite a volatile day for a lot of the U.S. indices. And as you can see there on the board, a bit of marginal positivity is feeding into markets, a bit of a continuation from what we have seen in the Asian session, at least so far this week. Starting off in the green, as I just mentioned there, S&P futures up just marginally after last week was quite sizable losses earlier in the week tied to the AI trade, but still quite a bit to pay attention to throughout the week. We still have earnings season. We're in the midst of earnings season from a number of corporates that we're expecting this week, and also a delayed jobs report and a CPI print to watch in the U.S. So quite a bit to watch as far as U.S. equities go. We also have dollar yen on the board. Of course, we mentioned that sizable win by Prime Minister Sanae Takaichi's party. Right now, dollar yen, the dollar is marginally down just about 0.3% to trade at about 156 there. We're going to have more from our Sharian in just a little bit. We're also seeing Japanese equities up as well. Gold is back on the board. We've been talking quite a bit over the past few weeks about gold having quite a volatile week last week. As you can see, gold up almost 1% there, back above $5,000 an ounce there. Though last week was quite a roller coaster for precious metals, more broadly, but still there's quite a bit to pay attention to when you factor in a few of the economic data prints that are going to be coming out this week. Perhaps we still see a flock to safe havens despite what seems like a bit of stabilization feeding into the markets, at least to start the week. And really quickly, let's just bring you Brent crude. As you can see, down now almost 1% there to trade at about $67.38 a barrel there. We just mentioned at the top there, Middle East tensions potentially easing as we get some insight into some of those talks over the weekend, potentially reducing the concern of supply for Brent and oil more broadly. And I want to bring your attention to this terminal chart really quickly. We didn't talk about it just there, but it's worth mentioning what we've been seeing from Bitcoin, because Bitcoin has bounced off some of the extreme oversold levels, but still it stays well below what we call the so-called Ichimoku cloud levels, which actually mandates risk management. What we're seeing from Bitcoin this morning, it is back above $70,000, but still Bitcoin has had quite a sizable roller coaster a few weeks, and last week in particular. But pay attention to these levels that we're talking about here. And in particular, 74,000 and also 78,000 are the two levels to watch very closely for Bitcoin. So that's just a look at what we're watching there with the largest cryptocurrency. Let's get back, though, to our top story, and that is on Japan. Japanese stocks are rallying after Prime Minister Sanae Takaichi clinched a 2/3 supermajority, positioning her as the nation's strongest leader in the post-war era. Asia Trade co-anchor Sharian joins us now from Tokyo. Sherry, thanks so much for being with us. So walk us through what this landslide victory actually means for the LDP party. This is significant for Takaichi, but also more broadly for investors that have been watching this closely.
Yeah, you've talked about how we're seeing the Japanese yen really holding steady at the moment, a little bit of a rebound after weakening earlier in the session. And of course, Japanese stocks rallying. The Takaichi trade, so-called by investors, where we're seeing really sell the Japanese yen, sell JGBs, but buy stocks, perhaps deepening from now on. A little bit of that priced-in momentum, which had already accelerated in this trade, perhaps leading to some of those mixed moves in the JGB market and also the yen rebounding a little bit. But it's just the fact that, as you mentioned, it was a landslide victory, historic for the ruling Liberal Democratic Party. Prime Minister Takaichi managing to gain that super majority. What that means is that the lower house election has allowed the LDP to override any veto in the upper house. And it's also the most ever seats gained by the LDP since its founding in 1955. And yesterday was such a snowy day when the vote actually took place, which is quite rare here in Tokyo. I was wondering what the turnout would look like. It's actually slightly better at past 56% than in the previous election of 2024 when the LDP actually lost its majority. So we'll be watching very closely how big of a mandate they have and how much easier it's become for Prime Minister Takaichi and the LDP to pass policies around immigration restrictions that we've been hearing about, a signal from a shift away from Japan's pacifist constitution. But of course, most importantly for the markets, what it means for the economy and its spending plans.
Yeah, and let's just stay on that, Sherry, because this seems like it's potentially a vote of confidence then for Takaichi to move forward on some of these plans. Can you just take us through what we could potentially see as far as economic policies?
We've been very much focused on the temporary suspension of the sales tax on food of 8%. We have seen the JGB markets already react to concerns about the long-term fiscal health of Japan, as we heard from the Prime Minister campaigning on that potential suspension of 2 years, which could cost the Japanese economy more than 5 trillion yen. That's more than $31 billion per year. How will that be funded has been a key question. We heard from the Finance Minister Katayama coming out today saying that the sales tax cut is only on food, is for 2 years, and it will not require additional government bond issuance. That's been a key question plaguing the markets. We'll also be watching foreign policy very closely. This sweeping mandate really giving Prime Minister Takaichi more authority when it comes to how she deals with China as well. Remember, we continue to see heightened tensions around Takaichi's comments on Taiwan last year.
Sherry-Ann, thanks so much for joining us there. Sherry-Ann joining us on our top story there. Let's just stick on markets. Asian stocks have climbed to a record as a broad advance across risk assets took hold. Gold and silver also gaining, though the precious metals were still way off their record highs. For more market insights, let's bring in Peter Kinsella, and he's head of investment services for the UK at UBP, joining us now from Dubai. Peter, let's just start where Sherry-Ann left off there, and that is, of course, Takaichi's sizable win. Many investors potentially paying attention to what exactly this means as far as economic policies go, and then what that means for the yen. I wonder if you take a look at some of the moves we're seeing at this moment with the yen, is your expectation we see more volatility over the next few days?
Good morning, Jennifer. Look, I think there's a lot going on here. First, I think that we've had a pretty muted move today following the election results. I think, frankly, that was to be expected. The market had really already priced in an overwhelming LDP majority. I think if we look at it with a bit more of a bit more altitude, what we can see really is that we're going to get increasing fiscal stimulus in Japan. It's kind of similar to what we saw in Germany about a year or two ago, and in a sense of a big announcement of fiscal stimulus. However, the difference is that the underlying inflation situation in Japan is much higher. So what that really means to me is that underlying inflation in Japan is likely to firm, and it means that the Bank of Japan will most likely be able to continue raising rates gradually. So what that means really is that we're likely to see a continued contraction in dollar-yen spreads, and that to me suggests that really we're very much close to the upper end of where dollar-yen yen is likely to trade. And I can see it definitely trading lower from here over the coming year. And that will reflect both, this front end steepening, but additionally, more broadly, I would say, a wider dollar weakening move. So to my mind, we're pretty much close to the end of the huge yen weakening phase we've seen since roughly 2013.
But what about when we talk about from a fiscal perspective, because it still seems that there's quite a bit of concern, not just in Japan, but globally, a bit of fiscal concern about what the path ahead for some of these governments look like. How does this factor into your expectation of JGBs?
I think really vis-a-vis JGBs, look, the idea here is that we are seeing, a massive increase in yields, particularly at the longer end of the curve in 20s, 30s and 40s. And really now, when you adjust these for hedging costs, Japanese lifers can now get much better overall returns rather than investing in US Treasuries and then hedging it back to yen. So at the margin, I think this will lead to a lower outflow of funds from Japan, and those funds will simply stay in Japan to a larger extent. So the supply and demand dynamics here, I think, will more or less even out in the sense that you're going to see more domestic capital staying in Japan. So that to my mind suggests that we're not likely to see very significant up moves in yields. Sure, we might get marginal increases, but overall I don't think they're going to be hugely significant from current levels.
Peter, I want to get your take on what we've been seeing with precious metals. Potentially, you say that we could see even more of a correction. We saw that gold is actually up right now. Do you believe that there is even more of a correction to come for gold and both silver? And is it a sign potentially of broader weakness for both of these metals?
Sure. I think really what we've seen the correction already. We saw that 10 odd days ago in gold. I think broadly speaking, I'm still extremely constructive on gold. I think we're going to get to levels of around $6,000 per ounce by the end of the year. And the underlying factors for that are pretty simple. You've got sort of ongoing geopolitical tensions, enormous central bank demand, and then very, very robust retail demand. So in a sense, what's really happened here is that the global demand curve for gold has shifted remarkably higher when you've got a background of inelastic supply. So to my mind, really, that suggests we're going to see gold trading at materially higher levels. We've seen the correction. I don't think you're going to see it a lot lower from here. And I think it's worth pointing out, some context. The correction we saw 10 days ago was the first significant correction we've seen since 2020. This has been a remarkable bull market for gold. And all of the underlying factors which propelled it to current levels, they're still very much in play. This was a very overdue correction. And let's be frank, it didn't last longer than 3 days. And that really tells you a lot about the underlying demand story here for gold.
But we heard over the weekend Scott Bessent in the U.S. actually saying that the action that we've seen in gold looks like a classical speculative blow-off. Would you agree with that assessment?
A speculative blow-off, perhaps, yes. I mean, that you've seen a little bit of the froth being taken out of the market, and certainly that would, that's been reflected in the options market in particular, where you've seen sort of, option volatilities really skyrocketing. At one point in gold, we were looking at 1 month implieds at, above 35%, which is extremely unusual for gold. So it does seem that the blow-off was, due to, speculative activity. That was especially true in silver. However, I think that correction is now largely done. You've seen sort of, I would say, a lot of the leverage being taken out of that trade. And look, we're now still left with what are very, very constructive underlying fundamentals. So yeah, it was a speculative blow-off, but nothing more than that.
Yeah, and your house view is for $6,000 per ounce by the end of the year. So we'll see how that plays out. We'll leave it there with you. Peter Kinsella, Head of Investment Services for the UK at UBP, joining us there in Dubai. Thanks so much, Peter, for your time and insights. Now, coming up, we speak to the CFO of ADNOC Gas, Peter van Driel, as the business reports earnings. Stick with us. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Cape Town. ADNOC Gas has reported full-year revenue of $23.5 billion, beating the average analyst estimate. But compared to the year before, that's a drop of 3.9%. However, full-year profit has risen more than 3% year on year. Joining us now is Peter van Driel, CFO of ADNOC Gas, joining us from Abu Dhabi. So, Peter, thanks so much for joining us, especially on this day. Let's just start here because we did mention you did beat records. What's your expectation for how this sets you up for 2026? Are you expecting continued outperformance given the current volatility that we're seeing, at least geopolitically, and how that's factoring into energy prices more broadly?
Yes, Jennifer, good morning. 2025, we delivered $5.2 billion, whilst the oil prices were 14% lower than the year before. So that means that if you increase your net income by 3% in a 14% lower oil price environment, there's quite some resilience in the company. Now, if we look forward in 26, I believe we will continue to operate in an oil price environment that is somewhat volatile. However, the company is able to continue to benefit from the strength of the UAE demand. Demand in the UAE for our products remains strong. We serve the power sector, we serve the heavy industries, we serve the petchem, soon also data centers. So that is where the balance comes in. We are able to sustain certain volatility in the export market, but the backbone of the company, and you've seen that in 24 and in 25, is the strength of the UAE demand.
Let's just talk about the export market, Peter. And I wonder, how are you balancing in terms of demand for the business, in terms of what you need domestically and what you need as far as some of these agreements that you're seeking in the export market? What is your focus right now for the business?
Right. So we believe that demand for gas remains strong in the coming decades, both in the domestic market and in the international market. If we look at the domestic market, you can see the GDP growth of the UAE, which was 4.8%, being the key driver for that strength. It's also the population growth in the UAE that drives demand for our gas products. Internationally, demand for gas remains strong, with Asia at least 40% demand growth. And we serve with our products, that is LNG, that is LPG, that's naphtha, those markets. So we're betting not just on one market, we see gas demand growth across the board, both within the UAE and in the LNG and LPG and naphtha export markets.
You recently signed an agreement with India. Is your expectation then for more of these agreements to come, just given some of those numbers you pointed out there?
Well, today we have 6 MTPA of LNG export facilities in Abu Dhabi. And under construction is another 9.6 MTPA. That's always LNG. That project will be ready late 28, and the majority of the volumes have already been sold. So about 80% plus has been already contractually agreed with our buyers. The current production, we will continue to see more value from LNG contracts, and there are either longer term contracts or shorter term contracts. And we balance that across a number of countries, predominantly in the East, but we also serve our customers, for example, in Europe. So it's quite a wide range of customers, and the customers want security of supply and diversification of their suppliers as well. And we're well positioned for that.
Can you definitively say which market will be the biggest market for LNG and for ADNOC over the next 5 years? Could it be Asia? Could it be Europe? Sitting where you are right now, what does it look like?
From where we are, Asia is definitely very important. Countries like India, for example, you see a huge growth in energy demand. And within the mix, you see that the share of gas is growing. So it's not just the size of the cake getting bigger, but it's also the part in the energy mix that gas fills is growing. Then we've got our markets in China. We go all the way to the east to more traditional markets like Korea and Japan. Those markets we serve. And then there also are a number of new entrants coming to the market. Think about countries like Philippines, Thailand. So the LNG market, longer term, is very healthy in terms of supply demand. Shorter term, you may see some oversupply, but we focus on the longer term. That is how we position the company for growth.
We'll leave it there with you. Peter van Driel, ADNOC Gas CFO. They're joining us on earnings day from Abu Dhabi. Peter, great to speak with you. Thanks again so much for your time this morning. Now, coming up, Iran has described Friday's nuclear talks with Washington as a step forward. We have all the details a little bit later in the show. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Cape Town. A Hong Kong court has sentenced former media mogul Jimmy Lai to 20 years in prison for conspiring to collude with foreign forces and a separate sedition conviction. The judges said Lai was, quote, the mastermind of the conspiracies and therefore warranted a heavier sentence, with the punishment being effectively a life sentence. Thailand's ruling Conservative Party has clinched a solid election win, marking the first victory this century for a party aligned with the country's royalist establishment. Preliminary results show the Boomjai Thai party is set to secure 191 seats out of a possible 500 in the House of Representatives. Meanwhile, the pro-democracy People's Party is on track for 115 seats. And the political future of UK Prime Minister Keir Starmer is in the balance over the appointment of Peter Mandelson as ambassador to the US. That's after revelations over Mandelson's past ties to Jeffrey Epstein. Starmer's chief of staff, Morgan McSweeney, has quit, saying he takes full responsibility for advising Starmer to make the appointment. It leaves the Prime Minister increasingly exposed as calls grow for a change at the top. And China's central bank has extended its gold buying streak to 15 months, even as bullion's record-breaking rally was curbed last month by a sharp sell-off. Data shows the PBOC's holding rose last month by 40,000 troy ounces. U.S. Treasury Secretary Scott Bessent has blamed Chinese traders for last week's wild swings in the gold market.
The gold move, things have gotten a little unruly in China. They're having to tighten margin requirements. So the gold looks to me kind of like a classical speculative blow-off.
A little bit unruly there from Treasury Secretary. Let's look at markets. Not unruly, as you can see, a bit of stabilization, at least for futures. As you can see, a bit of green on the screen for U.S. equities, continuing on from some of that momentum that we did see last week to end the week after what was quite a volatile few days over the past few days. Of course, that was in response to the AI trade, though we did see most of the major indices ending the week in the green. Euro Stock 50 futures also looking like potentially a positive start to the week, up about 0.4% there, though quite a bit of economic data that we are paying attention to, at least in the U.S., and plenty to watch for how precious metals are affected as such. Coming up, Saudi Arabia is looking to fine-tune its diversification push and draw more private capital. We'll bring you our conversation with the kingdom's finance minister next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Victory rally. The Nikkei 225 jumps and the yen edges higher after Prime Minister Sanae Takaichi's ruling LDP achieves the biggest post-war victory for a single party in a Japanese general election. Oil declines as tensions in the Middle East ease. Iran is describing its nuclear talks with Washington as a step forward, with another meeting set for this week. And we hear from Saudi Arabia's finance minister, Mohammed Al-Jadaan, as the kingdom plans to release an updated strategy for its $2 trillion economic diversification agenda. It's just gone at past 9:30 a.m. across the Emirates. 9:30 here in, it's actually 7:30 here in Cape Town. I'm Jennifer Zabasaja in for Jumana Bersechi. And let us just talk about that geopolitical development that we did get over the weekend, and that is about Iran saying that it has agreed with the U.S. to continue indirect talks to de-escalate tensions and avert a military confrontation. Tehran described the first day of talks being held in Oman as positive. Stuart Livingston-Wallace, Bloomberg's head of Middle East and North Africa, is joining us now in Dubai to break it all down for us. So, Stuart, are we close to a diplomatic settlement between Iran and the U.S.? This story has whipsawed a bit over the past few weeks and months. Where would you say we're at right now?
Yeah, good morning, Jennifer. I mean, the short answer is it's very hard to tell. Certainly, the rhetoric that we've seen from both sides coming out after those talks in Oman on Friday is significantly more positive than we'd seen in sort of the run-up to that is in the days running up to those meetings. However, it's still not clear where exactly the red lines are here. We seem to be focusing those talks around the nuclear issue more broadly, but no one quite knows what does that mean. Does that mean nuclear weapons? Does that mean nuclear enrichment? What about the very large stockpile of highly enriched uranium, that is uranium that has the potential to be upgraded even further to sort of bomb grade? And then there's sort of the outstanding questions of what about the missile program? What about Iran's support for its proxies? So there's a huge number of unanswered questions here, but they're still talking, and that's maybe the main thing to focus on.
Yeah, and notably, we're seeing the Israel Prime Minister actually heading to Washington. That seems like it could be a good sign. Do we have any more details about what exactly this trip might entail?
I mean, I think in terms of the comments that we had come out of his office yesterday, he's very keen to impress upon the US president that these talks must go far beyond the nuclear question, the nuclear file. So he's very keen on adding Iran's missile program and also its support for the regional proxies to those talks. He's saying, look, all of that should be one big question, because that, as far as Israel is concerned, is the full scope of the threats posed by Iran. So I think he's going to be pushing Trump for a much tougher line in those talks, and to make sure that the talks don't just focus on the nuclear file.
Stuart Livingston-Wallace, Bloomberg's head of Middle East and North Africa, joining us there. Stuart, thanks so much. A busy week ahead for you. Appreciate you joining us. Let's get back to our top story, though, and that is on Japan. Japanese Prime Minister Sanae Takaichi's historic election victory is sending assets in Tokyo soaring. For more, we're joined by Paul Dobson, our executive editor for Asia Markets. Paul, thanks so much for joining us. So we were speaking a bit earlier about how we're seeing a bit of muted activity as far as dollar-yen goes right now. What are you noticing right now with some of the market activity after this election win?
Yeah, hi, good morning, Jennifer. So the market, as you're saying, is taking it genuinely positively. And I think because of the force and size of the resounding victory, especially for the stock market, this is being seen as a real endorsement of the sort of Takaichi trade, the idea that Takaichi will do more to encourage growth, to fuel the economy, to reform the stock market, and therefore to boost the value of Japanese assets and companies. And that's why we're seeing the stock market do so well. But what I think is more interesting maybe is that the yen is relatively stable, as you said, and even the bond market, although there's some twitchiness there, isn't giving us a very big sell-off. So the market holding to the belief that maybe issuance won't be too overwhelming, even if she does have these plans to increase the spending, that the market will be able to absorb it maybe with that stronger leader in place. Likewise, the yen, you might have expected to weaken if the Takaichi trade played out the way that it has done previously. People may have been expressing their concern about Japan's debt load and about the way that it would manage it, but the yen has held in place as well. And I think that, we did hear from the finance ministry officials saying, well, with a bit of a warning, we'll address the market if we need to, but remember, we've had these talks with the US about the currency. So giving that idea that they're there to support the yen if needed. But in any case, it hasn't really gone to those levels at this point.
If we take a look at assets across the board more broadly, Paul, we're seeing a bit of risk appetite setting in, and commodities as well. We were mentioning gold surging right now. How would you assess the current sentiment as we start this Monday session? Yeah,
I think you're right, Jennifer. I think risk on, and I think I would describe gold and silver at the moment as being a risk asset, not a haven asset. So when they're performing strongly, it tends to lead the way for the equities market to have a good day as well. Even Bitcoin, we're seeing a little bit of a rebound after the heavy drawdown that we saw last week as well. So for whatever reason, the market seems to have recovered its poise for now. We had a really good day in US markets on Friday, and that has fed through into sentiment for Asia. So it's not just Japanese stocks that are flying high, but South Korea as well, and pretty much all of the regional gauges are up and enjoying a more positive kind of feeling to it. It feels very unstable at the moment in markets. The big volatility and swings we're seeing backwards and forwards as people try to tease out what exactly the AI trade looks like. How do you play it? Is it going to succeed? Are these companies strong enough to push through the plans that they have? But into the start of the new week, the market is certainly feeling a little more optimistic than it was in the middle of last week.
Yeah, of course. We'll wait to see how that plays out as we get more earnings throughout the week. Paul Dobson, our executive editor for Asia Markets. Paul, thank you so much for walking us through some of your analysis there. Now, Saudi Arabia plans to release an updated strategy for Crown Prince Mohammed bin Salman's $2 trillion economic diversification agenda as the kingdom adjusts its policies and spending priorities amid fiscal pressures. In an interview with Jumana Bersetchi, Finance Minister Mohammed Al-Jadaan said Saudi Arabia will continue to reprioritize and rework policies.
It's not only the GDP, it's the GDP, it's the inflation that is being put in place. It's around 2%. Unemployment in its lowest level. Women participation in the workforce is the highest level. And a lot of activities in the micro, small and medium enterprises. We have seen significant increase in new businesses establishing in Saudi. All of this actually brings a lot more consumption into the economy and more investment, which we are likely to see this in the medium term continuing at this level. And we are quite comfortable, but not complacent. We continue really to reprioritize, rework our policies, making sure that we enhance as we go to ensure that we enable the private sector to lead the economy.
Okay, so feeling good about the outlook for this year. What do you think the biggest risk is right now to the Saudi economy?
I think there isn't one specific risk that I can talk about, but the multiple shocks that we see globally will need to be watched very carefully, and you need to make sure that your policy is adjusted to deal with these shocks. And if we avoid complacency, which we are very much avoiding, I think we will be in the right track. It's not free of challenges. The world is the uncertainty world. And you just need to make sure that you build the resilience within the economy to deal with this uncertainty.
So let's talk about the transformation that the Saudi Arabian economy has undergone over the last decade. And there's been lots of talks, reporting recently that there's a certain reprioritization of focus that is also taking place as you look ahead to the next 5 years of Vision 2030. Walk us through just how those priorities are going to be recalibrated.
I spoke about this, Jumana, before, and the idea is when you have a 15 years plan, you will need to make sure that you adjust these plans as you go, because a lot of things could happen. And we have seen COVID-19, the inflation, monetary tightening, trade fragmentation, geopolitical tensions, and on the other side, you have seen a technology revolution that did not exist when we started Vision 2030. So we needed to adjust our plans. Our North Star is very clear. We need to diversify our economy. But the way we go about it is adjustable. And what we have seen is we have shifted certain projects that we scaled down, certain projects that we actually expanded, certain projects that we put on hold. Key reason for this is you wanted to make sure that you don't do too much at the same time, because that overheats your economy. You didn't need to do too much at the same time because your private sector will not be able to catch up. You need to make sure that your private sector is actually leading these activities, and you need to ensure that your people are able actually to capture the value that you are bringing onto the table. So reskilling, adjusting your education system, etc., that will enable the people to actually benefit from.
What are some of the main lessons you learned from the early implementation of the vision?
A lot has been learned. I can tell you, ensuring that you have a very aligned government is key. When we started, there was a lot of efforts to make sure that as a government, you understand exactly what you need to do and you are aligned. You coordinate rather than working in silos. That is very critical. The second is mobilizing your people. Unless you talk to your people and explain what you are doing and why you are doing it, and you show them benefits in a very short period of time. And we have seen that in the women participation. We have seen that in housing ownership. These are things that touches people immediately, and they need to see it. They need to see the benefit and mobilize them so they embrace the change and accept some of the difficult decisions that you need to make throughout this journey.
Yeah. Are you going to be releasing a formal, updated strategy for the next 5 years? Will there be a formal plan that's discussed?
Yes, and we are about that. I mean, we started this week within the government in a wider discussion to basically communicate what is the next 5 years plan, which is basically just doubling down on what makes an impact and execution and making an impact. I've said during the budget, our key focus is ensuring that we double down in tourism, we double down in manufacturing and logistics, technology, and ensuring that we provide the basic service. So the power, the energy generally in a wider context, water and water services.
I want to ask you about the budget deficit forecast for this year. You're targeting a budget deficit of 3.3% versus 5.3% last year. If the budget overshoots again, how will you plan to fill that gap? Would you resort to the international markets?
What we have done is, I think for the last at least 4 years, we started to publish 3 scenarios with the budget. And despite the fluctuation that you have seen last year and the years before, and our revenues, we have not actually been lower than what the lower case in our scenarios. And I don't think this year will be an exception. And we have a plan for it in terms of how we are going to fill the gap should we reach the stage where we are going to the lower scenario of the 3 that we have announced. So I'm not really worried about that. We announced our debt plan for this year, and we are unlikely to go to the public market with more than what we have announced. So we are using alternative financing for any additional financing that we may need.
That's Saudi Arabia's Finance Minister, Mohammed Al-Jadaan, speaking with Bloomberg's Jumana Bersachi there. And you can explore live streaming news and interviews, as well as all Bloomberg TV shows, documentaries, reporter analysis, and more in one place. Check it out at bloomberg.com/videos. All right, coming up, after an underwhelming 2025, could IPO deal flows in the Middle East come surging back in 2026? That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Cape Town. The fate of a few major IPOs in 2026 will determine whether Middle Eastern equity capital markets can recover from their weakest showing in 5 years. Middle Eastern IPO volumes failed to breach the $6 billion mark in 2025, with activity falling to the lowest levels since the pandemic. Deal flow was hampered by a string of soft debuts, a rebound in bigger markets, and anemic oil prices. Joining us to discuss this is Sumaya Aljazeeri, Assistant Vice President of Research at SICO Bank. Sumaya, thanks so much for your time. So we just mentioned it there. 2025 was difficult for Gulf IPOs. What is your expectation right now as we look ahead to 2026? Is it setting up to potentially be a bit more promising?
Good morning, Jennifer, and thank you for having me. When we talk about Gulf IPOs, it's important to focus on the largest market within the GCC because it has seen the largest part of the IPOs. And here I speak of Saudi Arabia, the Saudi market in particular. Now, it's not to speculate or foresee what's going to happen in the future, but to put things into context, the recent reforms that have been implemented in Saudi Arabia, we see them as a catalyst and perhaps as an important factor, meaningful factor that can contribute in enhancing the IPO ecosystem in Saudi Arabia. And that is due to, generating higher participation, higher IPO demand, and, even better pricing, and therefore better IPO trading. And this is where we see this in a positive light. It comes in tandem with the reforms that have been implemented in Saudi Arabia. Because capital follows reform yeah.
Go ahead.
Yeah, I was just going to say that, capital follows liquidity and liquidity follows reform.
Do you see some of these reforms then being broad-based? Will all sectors then benefit from some of the reforms instituted in Saudi, or will it be more specific potentially to tech like we've been seeing in some of the other markets?
Indeed, I think these reforms and, they are especially the latest market signaling that has, come through in the last couple of weeks, especially what has been reiterated by the CMA's board member in New York, reaffirming that there is ongoing study of full market liberalization or potentially either lifting the 49% cap or raising it. And this signaling is what we consider a follow-through, and it's viewed in a positive light. It gives the market confidence and reassurance. And what we see from this is also the ultimate benefits on the sectors, where I categorize them into two buckets. The liquid sectors, or what we call the liquidity leaders, and then you can call them the Vision 2030 enablers. And within the liquidity leaders at the forefront, you have the banking sector. Names like SMB and Al-Rajhi would be at the top of the beneficiaries from such reforms. Indeed, and within the Vision 2030 enablers, you have the telecom sectors, you have the healthcare sectors. And, this is not to just, be exclusive to those. Generally, by and large caps, index heavyweights will be the largest beneficiaries. And in addition to that, as well as those companies that are potentially to be included in global indices or could potentially benefit from upgrades. So all in all, these are the ones we see benefiting from further reforms.
Sumaya, just on that point, we have some Bloomberg reporting out this morning, which indicates that some of the banking sector is potentially urging Saudi Arabia's markets regulator to rethink potentially giving retail investors a larger share of IPOs just initially. I wonder if you have any thoughts on this, and potentially if that will help at least initially with some of the activity for IPOs in 2026.
Look, any room for increasing participation and, addressing the demand that exists on IPOs would be positive for the general performance of IPOs. And so if you can allow for the increase of retail investors, and there is, some demand that warrants that increase, then it should be a positive contributor.
And so potentially then that sets up more options then for retail investors moving forward. I mean, how does this shape out for the domestic community and also then for international investors who are looking to some of these companies and investing into the market?
I think we should look at this and also in relation to what has been implemented, allowing, there's removing limits on participation from foreign investors. And so perhaps what is being looked at here is, increasing the scope of retail investors that could potentially include foreign retail investors. And this would perhaps benefit the performance of IPOs. All in all, what you want to make sure is having solid participation that reinforces IPO demand going forward in the future.
We'll leave it there with you. Sumaya Aljazeeri, Assistant Vice President of Research at SICO Bank, joining us there. Thank you so much, Sumaya, for your time and for your insights today. For more of these stories, looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Plenty more news ahead. Stick with us. This is Bloomberg. Angola is reportedly looking to take a 20 to 30% stake in Anglo American's diamond unit De Beers. Reuters reports the proposal is being discussed with other diamond-producing nations on the continent. Angola previously submitted a bid for a majority stake in De Beers in October of 2025. Zimbabwe has secured a 10-month staff-monitored program with the IMF, seen as a key step towards clearing billions of dollars in debt arrears. The deal is intended to rebuild policy credibility and support talks on debt restructuring. Zimbabwe has been locked out of global capital markets since 1999 and is seeking to restructure about $21 billion in loans. And South Africa is withdrawing its troops from the United Nations peacekeeping mission in Congo as the country seeks to realign its resources. President Cyril Ramaphosa says the country will work on exact timing, though the withdrawal will be completed before the end of 2026. Now, let's just take a quick look at your markets. As we were mentioning, we are seeing a bit of positive momentum continuing from the Friday session on Wall Street. We did see some of the major indices closing up on the week, despite some of the volatility throughout the week, though quite a bit of earnings ahead in the U.S., as well as economic data to pay attention to. And Europe, Eurostock 50 futures are looking to start the day up as well, up about 0.5% there. That's it for Horizons Middle East and Africa. I'm Jennifer Zapasaja in Cape Town. Stick with us for Daybreak Europe. This is Bloomberg.